Welcome traders, my name is Adam Harris. I'm a Chief Market Analyst and I'm recording this on Sunday the 28th of January for the week commencing Monday the 29th of January. And so I want to have a very quick look at the economic calendar for this upcoming week. Plenty of news, which means there's going to be plenty of volatility in the market. Remember that it isn't the news that really creates the trends per se, but they can add a little bit of juice on top of it, a little bit of spice. And so we're going to see how that goes. The US economy in general is doing really, really well. Disregard most of the stuff that you hear. There's very few red flags, but there's a lot of conspiracy theories, and so we want to deal with reality on this show. So for the most part, let's just ignore it. But I do want to draw your attention to this Wednesday, January 31st, frightening that by Friday it'll be February. Okay, I don't know how that alarms you, but it alarms me. And so Wednesday evening UK time, we've got the FOMC statement, the Fed interest rate decision, and the press conference, and really everybody's going to be tuning into this because also in many ways over the last 6-7 years we've become very much addicted to when is the other shoe going to drop, where is the other pen going to come from. It's too good now, it's like something's got to go wrong. So that has become a permanent state of mind for us now, and I think that we need to kind of be conscious of that. So the reason I bring this up is that there's this expectation that there are going to be rate cuts. But one of the things I want you to understand is that rate cuts, the primary purpose of a rate cut is to stimulate the economy. That's it. That's like the number one reason to do it. But the economy doesn't need stimulation right now. And even if the jobs numbers, if for example, let's just say on Friday, we've got unemployment rate. We've also got on Thursday initial jobless claims coming out of the US. So let's just say, for example, that, oh no, okay, a couple more people, maybe 1,000 more people decided to are out of work this week, or potentially, went for jobless claims, went up a little bit, or unemployment went up a little bit like that. That's not really a red flag. That's not a trend at this time. The economy is doing really well. It can't be sustained forever, amazingly, but we might even get another surprise non-farm payroll. Really, the market's quite optimistic right now. This could be the state for the rest of the year. So the reason I'm telling you this, I want you to understand that we could even see, it's possible, we could even see another rate hike. Now this is something that nobody can really understand how that's possible, but we've got much healthier conditions today than we had prior, 2005, 2006, 2007. We've got high interest rates, we've got a growing job market, we've got optimism, we've got low unemployment globally speaking. There's political instability, but in every other respect, economies seem to be doing fine. So the real reason to do a rate hike was to cool an economy, and the economy is doing fine now. There's no real reason to do a rate hike. So I want to manage your expectations. I want you to understand that in a well-run economy, as soon as the economy is doing too well and bubbles are forming and the stock market's getting out of control, you get a rate hike. And people here are talking about, well, we've had all these rate hikes, inflation's coming down, so we should get rate cuts, right? I'm like, no. We will get rate hikes until inflation is under control. End of. Okay. Then if the economy is struggling for a quarter, then there'll be discussions of a rate cut. So this is my assessment to the situation. When the grown-ups are in charge, that's how they are supposed to do it. Whether that's going to be the case, I think that is more likely to be the case than not. But when we have the FOMC press conference, that's what everyone's going to be listening for. Most of the analysts out there that I think have got it wrong, and I realize I'm putting my testicles on the line here, who've got it wrong are expecting rate cuts immediately because they think we need it, but there's no stimulus required, and therefore rate cuts don't make sense. So I want you to pay attention to it because they might echo what I say. They might say, listen, we don't see any foreseeable rate cuts in the future, or they might say, yes, we do actually see one, but I want to know why then. That's it. Okay, and then the big kahuna, as usual, on Friday is non-farm payrolls, unemployment rate as well, but non-farm payrolls is really jobs numbers. Will we get another surprise outstanding number? We don't have to. The economy is doing fine. And when I say, I'm in the UK, so why should I care about the US economy? You know what? If the US economy is doing well, we are generally doing well as well, okay? And so that's why, as long as I focus on that predominantly, there's a ripple effect around the world. Knock-on effect is probably a better way of putting it. That being said, it's going to be a nice eventful week. I expect the market to be relatively volatile up until that period. Let's go and look at what the charts have got to say. Okay, so now we're looking at the VIX. VIX is rising up a little bit, but for perspective's sake on the monthly, still sitting very low. The markets are very calm, no volatility at this time. And to explain why I talk about that is if we were leading into some form of market crash, similar to the global financial crisis. There was a run up to that. The market was overbought, there was divergence, there were lots of things that were showing, there were lots of like amber lights, red lights going off. We're not seeing anything now. Okay, so everyone's going, well, we could have a black swan. That was a black swan event. And there were still signs when you look back. Index. So dollar index is battling. It spent almost an entire week in this area. If you look at it over here, it's also spent quite a bit of time here. It's battling in this area. It's a fork in the road. We've had a bit of a move and the market's not doing very much. Move across to euro dollar. And euro dollar coming down here, sitting at a major level, weekly level of support and resistance. So what is it going to do? Last week I spoke about the idea that it could find support here and continue up. So that's really what I'd be looking for. The thing is, because we have non-farm payroll at the end of the week, we could find that the market waits right until that before it makes its mind up. Maybe not. You can have it happen on Wednesday, and then non-farm payroll, if it's a calm, normal non-farm payroll, it'll just confirm that. So be prepared. There could be some big swings either way. So this week, you just really want to make it through. As odd as it sounds, as a trader, you just want to make it through profitably through non-farm payroll, because from Friday, when that news comes out until market close, we could see either a big reversal or a big move. Less often, less than 20% of the time, do we just see the market kind of go back into a bit of a coma or wind up because it's a Friday. We usually just see it go right, pushing to the wall until the market is closed. So just want to be aware of that. So sterling, again, we're still stuck within that range. No real change. No real change from that one. We got Aussie dollar, still stuck within this range, but it is hinting at Aussie dollar weakness, dollar strength. When you look at this, just this complete failure in this area, exhaustion, looks like it wants to go. So my expectation is probably something kind of along those lines. And then hopefully we'll get a move happening. And again, we could, like I said, the news doesn't always create trends, but a policy change could create a trend. So you could get the FOMC saying, well, we look to do this, and then that will be like, okay, now we're going to get a weaker dollar, or now we're going to get a stronger dollar, and then you can see a bit of a trend kick off. So that's a good thing. It's not a bad thing. Kiwi dollar is already starting to push a little bit lower there, so you could see exhaustion in this area starting to push a little bit lower, but it is a level of support. So we really do, I hate to have to kind of kick the ball down the road or kick the can down the road, but we still haven't had enough of a confirmation. Dollar yen here, hinting at dollar strength as well. But it hasn't broken through this level of resistance. So we are seeing hints of dollar strength and then just not seeing a continuation of that. So maybe that's what's going to happen this week. And again, I hate saying maybe. I love to be able to say to you, this is bullish. My expectation is it's going to continue. But we've been ping-ponging in an area for 2-3 weeks, and we need a bigger move than that. We need to see a continuation. Dollar Swissy, no real clear direction. For example, it's in an uptrend here, pullback, bullish candle, and didn't go anywhere. And then you've got a downtrend here. There's a bearish candle. We could see a move down, which would be a weaker US dollar. So we're just getting no clear signal across the board here. Dollar CAD also showing exhaustion here on the weekly. A break below that would be a weaker US dollar. We're still stuck within this range. So let's just expand the range over here so that you can see it, bring it down to the bottom, and that's the range. Actually, we'll just do it like this. There, that's our range. Moving on, let's go have a look at gold. So not a lot of clarity there. Gold. Also ping-ponging, it's a downtrend of lower highs, lower lows. So lower highs, lower lows, exhaustion, but it didn't break the low. So I want to see it break the high of the low. So I'm going to just mark it like this. I want to see it break this low over here or this high here. And there's a fair chance it's going to break to the upside. But then again, and then look at the MACD is kind of bearish at the moment. And then again, if we get a stronger dollar, we're going to see gold go down. If we get a weaker dollar, we'll see a climb. So we're just getting a lot of mixed signals here. Silver is pushed up quite a bit. That's actually a somewhat bullish reaction there. So again, a break of the high that before we get a break of the low is bullish and would require a weaker US dollar. Natural gas. Natural gas, not really offering anything of any value here. Thank you very much. Doesn't do anything on the monthly, is not showing anything. Look at light crude oil. There's our breakout. We spoke about this last week. Boom. Nice breakout above the 50 period, above the highs here. Consolidation and a breakout. So now the momentum should be to the upside. So this week, crude oil could provide some good opportunities to just keep going. To keep pushing to the upside there. That's not bad. West Texas, same thing. We've been waiting for this. We got our break to the upside. So that was a nice. I said to you last week, it could break to the downside. It could be a bit of that. But for the most part, this looked more like a bullish setup, and that's already looking nice and bullish. So looking good. Any kind of pullbacks here, continuation to the upside there. Let's go on to the global indices, and we can see sort of what's going on here. Overall, looks nice and healthy. I expect this to continue to push up. It's not going anywhere, but I expect it to sort of pick up that momentum. There's no real red flags anywhere. We didn't have a huge move this last week, for example. Here, I'd like to see any kind of a consolidation sideways or a bit of a pullback. Looks fine. The weekly looks good. Nice and bullish, guys. We've got the NASDAQ. There's our pullback. That's great. So how do we trade this? Well, let's just say that is our pullback. Hypothetically, I'm looking for a nice little entry above that high. I'm just going to bring it across here. A little bit of an entry there. Stop loss below the low. Or any subsequent candles in this area. And I'm looking for that move to happen. Is it this one? Is this one? Is it this one? Is it like from here down to here and then there kind of thing? Something like that. Okay, that's good. Doesn't really want to end. Let's just do this. Wow. I am on fire today. So any kind of a move like that would be great. Russell 2000. Okay, Russell 2000 has recovered relatively well. I want to see this breakout. This in isolation is a bullish setup in isolation. So it could maybe want to take a move and break out to the upside. So this week, we could see the Russell 2000 break out to the upside, guys. That's amazing. That's amazing. FTSE, nice little bullish inside candle. It's a bullish signal in isolation. I think we could see a move to the upside there. So isn't that interesting? Russell 2000 and the FTSE Russell could break, could break out to the upside. DAX, beautiful. Look at that little tap. Nice little bullish setup over there. Look, we spoke about this and there it goes. It was a very, in hindsight, because I only saw that setup last weekend. We were over here somewhere. Boom. And it just went. Like that was a no-brainer. You can see how nice. So that's probably going to keep going. It's had a nice bit of a pullback. 86, also looking very good. Look at that. Beautiful, beautiful, beautiful. There's your swing low. So I would expect this to continue up there. It's not overextended. Again, I said this, I think last week, we might be at the beginning of the next, not just right now, the next kind of technical bull leg up, but we might be at the beginning of the next golden era. I want you to think about this for a bit. The next golden era to me would make sense if in the beginning it's doom and gloom and everyone's like, no matter how many new highs we get, and everyone's doing well, economy's doing well, inflation's under control. Everyone's just like, nope, I can't accept that this is good. And then we look back and 10 years later, it's just been going and going and going. We could be at the next golden era. Just be prepared for that. ASX looks fine, really good. Nikkei showing a little bit of a reaction here. All this needs to do, and it would be great for it, is to just have a bit of a pullback and then go. Okay, just a deeper weekly retracement would be amazing. But it has pulled back in here. I might want to go again. One thing that could happen is it hits up here. It's a bit of a double top. In other words, encounters some bit of a resistance over here, fails, comes back all the way down. You get a little bit of a head and shoulders, and it comes back down. That could happen. So we could see a little bit of a head and shoulders. Let me draw that in. That's just a hypothetical, something like that. Wouldn't that be interesting to see if that happens? And then you get your weekly retracement. But overall, everything is nice and bullish. So we might just continue up. This doesn't have to happen. I'm just saying that would be fascinating to me if this weekly does indeed do a bit of a retracement. But otherwise, yeah, we could just have another bullish move. And then this week's candle just carries on. Okay. Major stocks. Nice little double bottom here. Very nice. Little pullback, looking for a bullish continuation to the upside. Yes, it's battling with that area. You can see that's a bit of a gravestone doji, all right? But the monthly looks good. So my expectation is we should break out to the upside. So far, we've actually seen a couple of hints. We've seen indecision on the currencies. We've seen some mixed signals there. We've seen gold, not really sure which way it's going to go. And we've seen as well with the indices, you know, some of them looking like really healthy, but also they could do a bit of a retracement. So again, some sort of mixed signals. So I'm going to go with it. I'm going to say I think the indices are more likely to probably go up this week. In the past, this happened, I think last year or the year before, every time we had a relatively rough week and then recovered, I'd be like, okay, or we had a great week, I'd be like, I expect it to continue. And then it would kind of stumble a bit. And then I'd be like, oh, okay. And then it would boom again. And I'd be like, okay, it's going to go. And then it would stumble a bit. So I'm a lot more cautious now about saying that. I expect these for the most part to finish higher. It should finish higher. Everything is overall intrinsically healthy. I expect that. Amazon, again, continuing to perform incredibly well. It should, in principle, just keep going up to all-time highs. It looks really good on the weekly, looks great on the monthly. Just kind of look at these, like these, here's a setup. I didn't trade it because I because I would rather have it in the portfolio. But this was like a no-brainer. There was actually a beautiful little pullback there. There was a breakout pullback bullish candle, but this was a really nice breakout pullback. So there were a couple of break and a retest settings within a strong trend, like no-brainers from that perspective. AT&T. Let's go and have a look. So this is a similar type of thing. You've had these breakouts and retests. Again, you might even get a little bit of a breakout and a retest. You have break and a retest and keeps going. Overall, looks good, guys. It's creating new highs. This looks good. I expect this to keep going. ARK Innovation. Okay, so I want to have faith in ARK. I really do. But Cathie Woods keeps making big mistakes. Exiting NVIDIA at the top. Buying NVIDIA at the top, then exiting at the bottom. And then Tesla tanks, and then she's buying Tesla. And I'm kind of like, from a technical perspective, she's getting in and out at the absolute worst times that like amateurs do. And I was an early adopter of Cathie Wood's ARK stuff. Big fan. Loved the genomics, ETF, all these different things. And now I'm like, man, if that was a trader on my trading floor, they'd be gone. So I am concerned because following Tesla, we'll have a look at Tesla. I don't want to go on about it, but following that, they went and bought up a whole lot because they see it as a discount. And my concern isn't intrinsically with the concept of Tesla being and electric cars and all that being amazing. It's that I don't feel I'm influenced by Warren Buffett. Management. One of his key criteria is that you have to have good management in a company. And I'm just not convinced that the management of Tesla is in hand. And for me, that would just be, anyway. So that's my concern with that. ASML, massive, great week. Boom, on fire, looks really good. This was almost a very decent buy opportunity there. That was a buy opportunity there, very good. Glencore, bottom of the range, bullish candle, guys. High probability, not guaranteed, high probability that that's going to go to the top. High probability. So let's see. Tesco, nice little retracement back in here. I'd look for a bullish candle soon and look for that to take off. So we'll see how that goes. Okay, so I'm going to leave that one for now. American and Amex, that was a beautiful, I think we spoke about this last week, buy signal, boom, on its way, easy stuff. I say easy stuff. The more time you have and the slower something's moving, the more likely signals are to be real. You get very few false signals. If you're trading on the 1 minute, you can get lots of false signals, lots of noise, because it's all over the place. But this time, so the higher the time frame, so in terms of ease of things to do, the easiest in the world is building a stocks portfolio. If you don't believe me, there's so many books where like just buy the S&P ETF or S&P fund, anything like that, just growth fund, just keep buying. And that's true. That's the easiest way to do it. Lowest maintenance, easiest thing to do. But buying stocks that perform well, and again, it's a Buffettism, is to buy a great company at a fair price rather than buying a fair company at a great price. So those are kind of obvious stuff that at least is obvious to me because I've read all the different books. Then it gets harder. Then day trading stocks is the next easiest, but still difficult to do. Then you get to day trading, and that's swing trading. Swing trading. Then you get day trading. And day trading on the 1 hour, the 4 hour gets tricky. Like that's hit and miss, and that's a lot more volatile. And then you get day trading on like the 5 minute, 15 minutes, and that's insane for newer traders. It's absolutely crazy. That's the hardest stuff you can do. Once you've mastered that, you look back and you go like, this is, looking at the weekly charts or daily chart for stocks is nothing because those signals, almost head and shoulders, almost always work out. Break and a retest, almost always, it's easy in comparison. Okay, so although with respect, I say it's easy after all these years, but it is easy compared to all those different things. Okay, so let's move on. Berkshire Hathaway's fine, bit overextended. I would look for a pullback. So for me, any kind of a pullback on the daily would be a really good setup there. I'd look for that. Coca-Cola is struggling a little bit with this area. I think I spoke about this last week. I would look for a nice break. Could be a nice break that goes that way. Hopefully that is the case. That's a nice setup in isolation. BP looks nice and good, but we've seen oil breakout, so that makes sense. So we might actually see this push up to the upside there. Exxon will be a similar thing. Again, bottom of the range, bullish candle here, bottom of the range, bullish engulfing candle there. Those are bullish setups. Okay, so traders might look at this and go, that's an easy one. Just buy on the close and just just close the chair, and that's like a 1.5 or 2-to-1, like easy money. General Motors, there's our nice little pullback, and then I wanted to know if it would break through. That's why the question mark was there. So let's leave it and let's see if it gets through it this week. JP Morgan Chase pullback. There's your bullish candle, and it's a continuation. Looks great. So that looks good. So JP Morgan looks good. Let's look at Adidas. Adidas, I was worried because the angle of price had shifted. So it was bullish here and not so bullish here, but that's a bullish setup there. So let's leave it for now, but that's a bullish engulfing candle, which is a bullish setup, and it's a series of high lows. So that in itself should see a push higher. Meta, just again, beautiful, 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 looks fine. Broken solidly to new highs, looks great. Morgan Stanley, a pullback with a bullish candle. I would expect this to potentially move higher. Let's see. I'm going to mark it. Let's see if that's going to be the case. Put a little bit of a question mark there because not sure, but that looks good. Expect to see if that's going to break high. Battling with that level, but let's see if we can get through it. Nvidia again looking really good. Okay, these all look very, very nice. This was there was just a ridiculously solid buy there, and a nice little breakout to the upside there. All looking good. Again, overextended, so some kind of a pullback into this area for me would be a nice little bit of a buy opportunity there. Netflix obviously now catching up. Beautiful consolidation breakout, very, very nice. Any kind of a pullback would be a buy opportunity. Looks really good. This is a weird one. So PayPal managing to shift and then failing and still below that 50-period moving average. Just can't seem to break the curse. It's trying though, it's trying. So I'm going to leave it for now. It's not looking good, can't seem to break the curse. I thought that was the breakout, but then it immediately came back under it. So we need to see another break. What we need now is we need to see a break above here. That's what we need. That would be, it would free it up. It should start increasing. Spotify looks good. These are good, nothing to change. Spider, bit of a pullback here. So here could be a bit of a setup this coming week. Possibly a nice little thing in this area, looking for something there, it's within the range. I beg your pardon. But actually that would work well. So we're looking for this to come up and break up through that level. FedEx, again, all over the place a little bit, but still trying to push higher. So let's see how FedEx does, because it's not a little bit in no man's land. It's not super bullish, not super bearish. And Tesla, of course. Now, so notice how Tesla, of all of these, is the one that has had a major drop this last week. I don't know if I spoke about it in last week's video because I did it on investing.com, but like the majority of stocks are going up. I'm going to we'll have a look at a couple more now, but the majority of other stocks are going up. Tesla's kind of going down. The problem was this, and again, this is not really a forum for this isn't really the point. I want to analyze this as a stock. But what happened was there was a conference call after the disappointing earnings thing. So fine, let's just say fair enough. Let's say demand is slowing and conditions and they're absolutely correct. Let's just say that was the case. But then you would expect management to step up, say this is how we're going to manage this. This is what we intend to do to fix it. And instead it was like blaming this and blaming that, and it was kind of really disappointing. And I think that actually added to it. I think you had people that were going, "This is my last chance." If they try to if they just try and lie their way through it, then I'm done. Like, I've given you lots of chances. I understand if conditions aren't right, but you keep promising things are going to get better and then they get worse. And then you promise they're going to get better and they get worse. And it's like a relationship. And eventually they go, you know what, I'm going to give you one last chance. If in this one you step up and you're honest and you own it, maybe I'll give you another shot. And that didn't happen. And that's why I think that you had the initial reaction to the earnings and then you had a subsequent sell-off, because they were just like, okay, not just that the numbers don't work for me, but the way I just don't trust management anymore. And I think that this is going to be a crucial issue. So let me go and have a look at a couple more let's go look at some BMW and a few others and see how they're performing so that we can at least compare like for like. Okay, so this is Toyota. Toyota's monthly, weekly, daily going up. Not a problem. Looks completely different to Tesla. Okay, let's see what else we got. Okay, so now we've got BYD, Build Your Dreams, the world's largest EV manufacturer. They look similar. Didn't drop as much, but it's a downtrend. It's a downtrend, looks bearish, fair. So now we've at least got a comparison. Very sort of complicated, also not looking really, really good, but at least now you can see, okay, Tesla's not in isolation, that performance isn't in isolation. Okay, now we're looking at Mercedes-Benz. Looks okay. Doesn't look terrible. Doesn't look as bad as those two, but also doesn't look great. I'm looking for something which was similar to Toyota, just kind of heading up. Let's see what else we got. There we go. Good exercise to do this. Volkswagen turning around, starting to push up a little bit higher. Track record has been absolutely terrible. Monthly hasn't looked really good, so it's had a terrible performance going back to 2021. Starting to climb up now. It's on this side of the 50-period moving average here. Once it gets above that, but it's already in an uptrend at the beginning, at the bottom of an uptrend starting to go up. So certainly just looking back to October, it's performing better. Okay, so fine. Again, tells you it's an interesting comparison. Okay, Volvo. Volvo is fine. Taken off, doing really well. Volvo doing really, really well. They've got the Polestar 2 outstanding. The thing is that just very quickly, Polestar 2 comes out and there's just no support issues, no technical issues with it, no service issues. Price is slightly cheaper. The performance is pretty much as good. Not necessarily pioneering, but definitely not lagging. And so it's just a good car. It's a great car at a good price. And it's, so not necessarily sexy to some people, but they look really good. Then you look at Polestar itself, so they are related, but it's BYD, Volvo, Polestar. Anyway, and you can see here it's turning around. You've got bullish divergence, that's starting to break above it, but you can see also terrible performance here, also scraping the bottom. So there we go. So I like this because so far we've been through it, and the ones that are focusing predominantly on EVs are not really doing that well. Others that are doing other types of products seem to be doing better. So just an interesting exercise. I also think it's important to do Lucid. So Lucid wants to be kind of the Lamborghini or the Ferrari beating Tesla from that perspective. And you can see they're pretty much kind of flatlining here. The car's got better mileage and all the trimming's more expensive, but also just so you can see it as a comparison. I think that's also worthwhile mentioning. And last one before we move on, Nissan. Nissan going largely sort of sideways here, bit of a double bottom, kind of struggling a little bit in that area. So we also know that there are some potential issues with car sales in general globally and also in certain parts of the regions. So car sales struggling a little bit here. I think that was a really good exercise to just go through. It really helps get some perspective on it because I've been busting on Tesla quite hard lately, and I call quite a lot anyway. And just interesting, I think, there to get some perspective. We can see that a few are doing really well, but the majority are kind of flatlining for the most part. So there we go. Let's move on and have a look at Vanguard. Vanguard doing very, very well. All of this, the pulse looking really good, the structure looking good. I'm very happy with these. Not even too overextended over here. Might slow down a bit, but looks good. Walt Disney. I spoke about Walt Disney providing a buy signal here. I don't know if I did it in last week's video, but this could be the buy signal that we get from Walt Disney. That could be it that leads to the all-time highs. So interesting to see. I'm going to keep that as it. I've used it as an actual order. Looks really good. So now we're going to see. We have a quick look at these. I was looking to see if we'd have a bullish candle to break out to the upside. We didn't. We didn't go anywhere. We're still sitting here. So what I'm going to do in this case is just move it across here and see if that happens. We haven't even broken the low. So let's see if that's going to be the case. EURUSD, on the other hand, had an indecision candle. So now I'm looking to see if we get a break to the upside there. This looks more bullish than the 10-year UST notes. We'll see if that's the case. Looks good. Let's look at cryptos, guys. Let's do this and we can wrap this up and you can, go back to your loved ones. Bullish candle there, consolidation, bullish candle. That is a buy signal in isolation. Yes, there's a bit of a failure here, but that's a failed breakout consolidation. I think that could be it. We could see a continuation. Again, on the monthly, I still would have liked a pullback down to here and a continuation. But that is certainly, it's now saying I want to try and head higher. Ethereum, pullback here. We should get a bullish candle here. That's not that far off those moving averages. It's an indecision candle, so I would expect a bit of a continuation from here, but it's interesting to see them. What I like about this is that we're not in a bubble right now. Here you can see this Solana breaking out to the upside there. There's a bullish continuation. These are good signs. These are good signs. We needed to calmly climb up because that's how you've had people losing their houses over this kind of stuff because of that. This looks fine. Once we break through that, you'll know it's really starting to turn around, but it looks really good. It's got some buys in here. It's not terrible. And Binance last on there as well. You can see some big reactions here, but of course, FTX has been in the news recently as well. So there's no doubt a tight relationship between them and Binance. So we'll see if that's, if that's potentially what impacted it here, but it seems to be holding up okay. We'll see. If the rest of them break out to the upside, this should also break out to the upside. There we go. So I'm going to leave you with it. We're at 29 minutes, and I really don't like it when I go beyond 30 minutes for these. I like them to actually be closer to less than 25 minutes if I can do that. Today, I apologize. I wanted to add in a little bit more than do a bit of analysis on a few other things. If you'd like that, please give me some feedback on that as well. I do take a while to respond to comments. I also take a while to respond to LinkedIn because I just have too many things on the go as well. It's been a killer month as well. I'm having my best performing month, best trading month in like 18 months. It's absolutely killer. I want to hopefully finish it on a high. I hope so. And I want to say to you guys, yeah, wish you a fantastic week, guys. Manage your risk appropriately, trade your plans, plan your trades, do that whole kind of thing. And I look forward to seeing you in my next thing. Also, one of the things I might do is try and do a webinar for you guys. So it'll be a live webinar, give you 2 weeks notice, and then you can just join me and we can have a nice interactive session. Would be great. Okay, I'll leave you with that. Thanks very much.